All right, take a look at what it comes to this Thursday morning, and it looks like things are looking okay right now. I mean, you got to think what we saw in those Fed minutes in July. So it was leaning more dovish, right? Fed officials saw a case for easing in July. Does this solidify that September rate cut that's been priced in these markets? In fact, you add that to the job revisions that we got, which showed, 818,000 fewer non-farm jobs in the U.S. than previously thought. That really added and fueled a lot of the market action overnight as well. But that was the largest sort of revision we've seen since 2009. So what happened? Stocks saw a bit of a gain there. They thought, look, we thought it was going to be $1 million in terms of those revisions, so it was a little bit better than expected. But there are some sense here. Does the job market now have a bit of a question mark of just how strong it really was in the first quarter as well? Bonds are also gaining as well. Yields modestly lower overnight across the curve for treasuries. We've stabilized a bit here in the Asia session, but we were at one point punching a 391, 392 handle for your U.S. two-year yield. We're at 394 levels here right now. The curve did steepen a little bit here, and we're watching very closely where the dollar is right now, given the euro, the pound, hitting that one-year high. Is there a bit of fatigue in this dollar downward story now? Dollar yen's at 145 as well. We're counting down to that UEDA Parliament meeting, the like here on Friday, likely to get some sort of grilling, I believe. And we're watching oil markets. We saw a bit of a slippage overnight. Brent seems to be continuing that trend here. We're just below $76. Gold very close to that record high once again at $25.50 or so. In terms of the Asia session and what we're looking at, looks like when it comes to Australian stocks, we're on one of the longest winning streaks that we've seen for some time out of Australia. Nasdaq Golden Dragon recovering overnight as well. Some good news on Xiaomi when we saw with the earnings as well. We're going to bring you that interview with the CFO a little bit later on. But that certainly helped kind of recharge the tech sector a little bit. Futures are looking like this at the open. Of course, we're looking at stocks. We're also looking at FX, right? So the renminbi basically gaining for the last 5 days or so. Watching that fix once again after what happened yesterday, right? The PBOC dialing back its fixed support. And, the likes of BNP Paribas are saying, watch 710. That would be the critical level to watch now from BNP Paribas' Zhu Wang. She says FX policy, Dave, from the PBOC has turned neutral.
Yeah, well, we don't have to do our Billy math these days, right? Because the fix and the estimates are just about in line, and we'll see what that looks like in about 12 minutes from now. To Yvonne's point, we're looking at a rally taking place in Australia, longest since 2015.
Yeah.
The dollar is looking extremely stretched to the downside. More on that in a moment. As it pertains to mainland markets, though, the 3,300 level, we are approaching that again to the downside. And that seems to be a level where we tend to get a pickup in turnover on some of these index ETF trackers that might indicate, of course, that is where sort of state support is and looking to defend that specific line. Big earnings theme across greater Chinese markets today. Earnings reaction from some big movers. AIA was a couple of hours back. Lufax. Xiaomi will unpack those earnings a bit later on in the show. Plus, of course, a lot of big earnings coming up as well. Baidu and Ping on your screens as well. Right. AGM, of course, out of Alibaba. And certainly what is the market iteration here? Do they move the primary listing to Hong Kong, which then would make the listing in Hong Kong eligible for the Stock Connect? Right. Now, on the macro story, on the Fed conversation, done deal for rate cuts. You had a massive revision lower, 800,000 jobs. Overnight, as Yvonne is pointing out, the euro and the pound at 12-month highs, and the dollar index is total eclipse of momentum. We're now looking at a 4-year low on this gauge of downside momentum. Last time we saw this was during the pandemic there, of course. Right. And on that note, the minutes from the Fed's July meeting show that several policymakers are acknowledging this plausible case for cutting rates, with some even seeing risks of a more serious downturn in the job market. Let's bring in Mark Cranfield in Singapore for us, MLive strategist. Mark, I mean, the Fed better cut rates next month, suffice to say.
Yeah, you imagine the pushback from the markets if Jerome Powell stands up this week at Jackson Hole and says, well, guys, we're really not quite ready for September. Maybe we'll wait until the end of the year. I think the market reaction will be pretty violent. I mean, considering how much is priced in. I mean, if you look at the derivatives curve, I think we're pricing for something like 150 basis points by the middle of next year. So traders are pretty much thinking once the Fed gets going in September, they'll continue lowering interest rates for most of their meetings for several months afterwards. And that really is a significant amount of money priced into the market. And you can see we've had stories this week on Bloomberg about the size of open interest in the Treasury futures market, which is a very good indicator of how big positioning has become. The amounts of money involved are really quite enormous. So Mr. Powell and his colleagues will be taking a great risk if they decide that it's a bit too early to start lowering interest rates. But of course, what the traders are also looking for is the guidance, where we go from here. So the data we had overnight wasn't a big surprise. People were expecting that there will be a big reduction in the number of people in the jobs reports. That's not a huge shock to them. If you also look at the minutes, there's nothing too surprising there either. But in the meantime, we've got Jerome Powell to speak. We've got a PCE deflator report next week, which is very important. Again, it needs to endorse the idea that inflation is getting close to 2%. And then probably the most important of all is the payrolls report in the first week of September. The shock last time was that the unemployment rate went up to 4.3. Traders jumped all over it. That's why we have yields below 4% now. So you can imagine if, say, that employment rate goes up to 4.5, people will be pushing hard for the Fed to go by 50 basis points, not 25, when they meet in September. So there's still a lot to play out, even though it looks as though we have a lot of information. We don't have all of it, and there's more to come over the next couple of weeks.
Mark, we talked about the euro, we talked about the pound. The yen seems to be bubbling up again. You take a look at when it comes to overnight volatility. It's basically at the highest levels we've seen since that August 5th sort of craziness of that day. There's a lot bubbling up about what Ueda's going to say on Friday to Parliament. I mean, is he going to get a big grilling? What does this mean for markets?
The Japanese Parliament are probably going to be looking for a scapegoat. There was huge turbulence in Japanese assets at the beginning of this month. We saw the Japanese equities in particular. They went on a huge roller coaster. And usually somebody needs to be blamed for these things. But Mr. Ueda will probably take heart. If you look at the LDP leadership race, we've heard from at least one of the candidates that he thinks that the BOJ is on the right path, that interest rates do need to go a bit higher because the economy is strengthening, the salaries being paid to people are high enough. So he'll probably be emboldened by that. If you look at everything that Mr. Ueda has said so far, he clearly thinks that the job of coming out of negative rates, the job of normalizing policy has a long way to go. He thinks the job is not finished. And I'm pretty sure that's the message that he'll be giving tomorrow when he speaks to the public. He'll use his words very carefully. He has to be diplomatic. He's speaking to an audience. After all, they appointed him. So he needs to be careful how he does it. And they will be looking for anything where he says that, oh, maybe we made a mistake. It's unlikely he's going to say that there was anything wrong with the rate hike, and he will probably lay the ground for future hikes. But he will say it's going to be moderate. It's not going to happen immediately. It's very unlikely the Bank of Japan will raise rates again in September. But then that was never really on the cards anyway. We haven't seen many situations where the Bank of Japan hike from one to the next meeting.
Mark, thank you so much. Mark Cranfield in Singapore for us. We're going into the open today, 20 minutes away. We're looking at gains across the region here. In fact, since that crash 2.5 weeks back, Asian stocks have closed lower only twice since that day. So it's as if nothing's happened. Marcella Chow is with us here on set, global market strategist at JPMorgan Asset Management. It seems like nothing's happened.
Yeah, markets have rebounded mostly, and market sentiment and most investor sentiment have already gained back. But admittedly, over this past few days, I think market is still awaiting for example, what Chairman Powell is going to talk about at the Jackson Hole. And I guess coming up in the next few months with the ongoing political uncertainties, with the elections coming out, and how market remains very sensitive, especially in the States, remains sensitive to all these upcoming economic releases, market will stay volatile. So I think active management and diversification remains the powerful tool.
Yeah, I mean, you say that. I'm just wondering, when it comes to what the Fed's going to do, right? It seems like we're leaning towards a cut is almost a done deal next month. But whether it's a 25 or a 50 basis point cut is one thing. Did the job revisions and everything we got in the last 24 hours, did it change your view on whether you're leaning towards 25 or 50 now?
Right now, I think it's more forward-looking going ahead. And I think, like what he was alluding just now, I think the job numbers that come out early September will be more key. And especially now that the Fed is placing more emphasis on the jobs report, and so the unemployment report will probably, and an unemployment number, whether it's going to go up further, that will be the key to hold the market.
Right, and the slowdown has helped the market recover. Should the slowdown worry investors looking forward in the U.S.?
In the current juncture, as far as the latest data that we got, for example, last week we got unemployment claims. Actually, they were pretty decent, and also activity indicator like retail sales actually was better than expected.
Right.
So last week, the jam-packed macro data were actually aided market sentiment a bit. Yes, we continue to expect soft landing, suggesting that inflation is going to moderate. And the economic growth is slowing. Indeed, we acknowledge that, but it's not to a point that is cooling or slumping. So that is actually quite a perfect combo for equities and also fixed income to outperform in the next 6 to 12 months.
Okay, so what have you done in the last few, or at least recommended the last few weeks? I mean, is it just buy on the dips? What are you kind of sticking to right now in terms of trends?
Given how the market sentiment has improved, and there are actually two things. Given how market volatility will stay in the next few months, definitely diversification, and also fixed income if indeed market or data is going to slow worse than expected, then we'll definitely go high up in quality or into investment grade. But then it is in line with what we're expecting with soft landing, with economic growth slowing, but actually still decent. Actually, what we saw on August 5th with high yield, actually the spread did widen to 424, but still much lower than the 10-year average, suggesting that the market is actually pricing in a pretty decent economic momentum going forward. And also with high yield, U.S. high yield, we see that yield is decent, and with an income environment that people are hunting for, and also with modest refinancing in the next coming few years, the fundamentals remain quite key and quite good for high yield market as well.
Yeah, it seems that dip in high yield was easily bought quite quickly, right? And I think we've outperformed, I think, 2% right now. What do you think about treasuries? Are you getting asked about treasuries, for example? Do they look expensive to you at these levels?
Right now, I think market remains very sensitive to all these Fed speakers, Fed speaks, and also all the economic data. But right now, we're expecting probably just 25 basis point cut in September, and going forward in the next few months, probably going to stay data dependent. But looking ahead, we're expecting probably another additional 25 to 50 basis points cut before the end of the year. So right now is, I think, for market to adjust to this expectation, and whether that will provide probably where it's heading to is more with regards to the upcoming economic data release.
Okay. You mentioned that once the Fed starts actually cutting, that it's an inflection point for Asian assets. What parts of the market do you think would benefit the most?
At this current juncture, with this income hunting for investors, definitely, for example, Asia high dividend, particularly with embedded options to manage volatility and also can enhance income furthermore. And also particularly with dividend, and actually that has been a key contributor to Asia Pacific return since 2020. So that will continue to be a key part. And actually within globally, Asia Pacific remains to be a key region that gives out over 4% dividends for a lot of corporates. So those continue to be key highlights or positive catalysts.
It seems income is the strategy to lean into these days.
Yeah, particularly as people are pricing in the Fed could probably embarking a rate cut cycle. So cash will no longer decaying, and so they are hunting for other sources of income.
How do I look at something like gold? Is it still the inflation hedge that I need? I mean, we're getting into record highs now at a time when equity markets are doing quite well still.
Indeed, and given how all these market volatility, and that's actually provide more positive catalysts. And actually in the past few year to date, we have actually seen a lot of central bank also diversifying and adding into gold into their holdings. So that's why there are different fundamental reasons that continue support, and especially as real yields continue to fall, that might actually contribute to further improvement in the gold.
All right, Marcella, thank you. Marcella Chow there, global market strategist at JPMorgan Asset Management. If you missed it, we just had that fix just across the terminal here at 712.28. So still pretty close to what the estimates are. So once again, we are seeing maybe less support from the PBOC when it comes to these fixings here today, and really just reflecting what we're seeing in the spot markets as well. We're at 712.83. levels for renminbi.
Right. That's the macro. We'll turn our attention to the micro coming up. It's of course, we're in the thick of earnings season in Greater China. We hear exclusively from the CFO of Xiaomi. The Chinese smartphone maker, and now, of course, also an EV player, reports its fastest sales growth since 2021. Cutting down to the open of trade, 14 minutes away in Shanghai, in Shenzhen, and here in Hong Kong. You're watching The China Show. Good morning.
Well, China has launched an anti-subsidy investigation into dairy imports from the European Union. It's the latest development in a tit-for-tat trade dispute. Let's get to Min Lo, our China correspondent, joining us now. With the latest, what more do we know in terms of this probe?
Yeah, so the Chinese Commerce Ministry has now launched an anti-subsidy investigation into the European dairy industry, which comes as no surprise. We have heard rumblings of this in Chinese state media that agricultural products could be targeted, and the dairy sector is enjoying massive subsidies from the EU. The EU's largest subsidy program is the Common Agricultural Policy. It has a budget of 60 billion euros a year. It makes up more than a third of the EU's expenditure. So this is where China can make a strong case that the European producers are benefiting unfairly from these state subsidies. And bear in mind, if you look at the overall the trade balance between EU and China, there are actually very few categories where the EU runs a trade surplus with China, and top of that is food and drinks. So if you trace back to the start of when the EU began investigating Chinese EVs, Beijing has retaliated with probes into European brandy, European pork, and then now dairy. So all of these are food categories where they can hit the EU the hardest. But overall, if you look at the trade balance, again, it's overwhelmingly in China's favor, which means that any sort of tit-for-tat retaliation in this war is likely to inflict more pain on the Chinese side than the European side.
Disproportionate, right, to your point. So how might this play out more broadly as we look at not just EVs, to your point, and not just cognac, for example, this broadening out of product categories?
Yeah, well, I mean, it's really hard to decouple this current dairy probe from the EV tariff because the timing of it comes just a day after the European officials had said they will impose a 9% tariff on Tesla cars exported from China, which is less than half of the average tariff rates for other Chinese exporters into Europe. And currently, I mean, China will have quite a challenging time because they need to persuade the majority of European nations that would make up at least 65% of the bloc's population in order to get the EC to overturn that tariff rulings, that tariff decision rather. And so far they have been pretty strategic because if you look at the top four most populous countries, that's Germany, France, Italy, and Spain. And so far China has targeted European brandy, which targets France. Pork targets Spain. They are now looking at cheese, which targets Germany and France. And then they have hinted at vehicles with large engines, which targets Germany and Italy as well, because remember, Italy exports a lot of those luxury vehicles like your Lamborghinis, Ferraris. There's also been rumblings of maybe luxury consumer goods, Italian brands could be in the firing line as well. So this is how it might play out in the future. But again, whether this could be a bargaining chip to get the EU to lift those tariffs is a different question, because it will look like they don't really have a lot of conviction behind those tariffs if they walk them back. And it will draw the ire of the US as well.
Okay, well, Min, thank you so much. Min Lo, our China correspondent here. And some of these names are actually gaining. In the case of China, Yoran Dairy, up 4% in the pre-markets, up the most in about 3 months or so, maybe on the back of a reaction to that story. Going into the open today, 8 minutes away, we're looking at futures pointing higher. The Hang Seng Index may be tracking, of course, what we had in global equities overnight. This risk on session this Thursday morning, opening about 7 minutes away.
All right, it is a earnings sort of feel to stocks to watch today. We're watching Xiaomi. There you go, seeing that pop of 5.5% here on the back of what we saw, right? So second quarter revenue beat. There was that surprising EV margin to talk about as well. We have that interview with the CFO coming up as well. AIA, we were talking about when it comes to the first half. Value of new business did beat estimates as well, but the stock is heading the opposite direction. And Geely, some pretty good numbers there as well. As you talk about here, income surging. It looks like, I think, first half profit soared some 575%. As well. And Henderson Land went to watch as well a little bit later on with those numbers that came out. And we're watching JD, watching Quiet Show. These were the biggest drags on the tech index yesterday on the back of that Walmart stake sale, on the back of their earnings. Look, a bit of a recovery there. JPMorgan, Dave, saying, look, it's a short-term negative. It's not going to change the fundamentals for the company.
Yeah, it was a good buying opportunity if you got in yesterday. As you can see, we're up 3%. Quiet Show not quite moving. Recovering as quickly as JD.com, of course, also, as Yvonne was pointing out, quite a big drop that we had there. Now, going into the open today, the Hang Seng Index, Hang Seng Tech, and when you look at our approach to the open today, just keep in mind we're looking at a couple of things still. The dollar weakness coming through. We are expecting to get on the earlier rate decision out of the Bank of Korea more details on the statement, what that forward guidance is looking like, and this time next hour, of course, will be the press briefing out of the Bank of Korea. Hang Seng Index 0.6%, broad recovery across the tech space, and some of your analyst actions, of course, Henderson Land City, to the point earlier on.
Watching closely brokerages, right? Yeah. This is from the Morgan Stanley call, saying they're upgrading CITIC Securities, saying that Chinese brokers are potential beneficiaries, given that market shift from fundraising to improving shareholder returns. Still too early, though, they say, to call a bottom, though, for the sector. We got the open coming out. Futures are pointing positively here this morning. Welcome back. You're watching the China Show. We're counting down the open of markets, and certainly we're watching very closely what happens when it comes to risk assets here today. So stocks are still continuing to get bid up here after what we saw. So that dovish Fed minutes that was, for July, looks like people or Fed officials were keen on easing, maybe even that in that meeting. Solidifies maybe that September cut as well. Those revisions in the U.S. jobs report also did actually help as well. You're watching how Hang Seng is doing. We're seeing continued gains here this morning, Dave, and really watching very closely a lot of earnings and earnings reactions today.
Yeah, Xiaomi and I think Ping An is coming out with earnings today as well. Baidu's one to watch. We'll get a preview of that in a moment. To Yvonne's point, of course, also in the macro, which will tend to benefit offshore equity markets more than it tends to do lift mainland equities. On that very note, the 3,300, I'll show you a chart later on why that's very closely watched today. 33.22, we were up, down 3 days up to, and then again, we're looking at an up day right now. Your 10-year yield at 2.16, so we are getting this rally again resuming on the CGB space. 30-year yield also seeing catching an early bid today. Shanghai crude, we're looking at this 2% in the early goings. West Texas oil trading near the lowest levels of the year. So just watch that very closely, and of course some of these oil-related counters as well. Right, change things up, please. And speaking of Ping An, right, there we go. Hong Kong and the earnings parade continues here in the city. AIA, of course, came out a couple of hours back, increase of about 5.2%. to the interim dividend. We're looking at a rally, though, across HS Tech right now, 1.4% to the upside. Speaking of earnings, a couple to tell you about. So Kaisa out with prelim numbers. This is guidance. It's a guidance towards, I believe, which is a net loss out of the company here. 11 cents right now is where we are. Prelim net loss there. That's the range for you, bottom of your screens. The fastest revenue growth for the second stock on your screens here, going back about 3 years or so. In fact, we just spoke with the CFO earlier. We'll tell you more about that in a moment. Earnings coming through as well out of Wuxi, and as we mentioned, Baidu is also coming out later today. Right, we're looking for any market reaction to the news yesterday that China was looking into some of these dairy imports out of the EU. Mengniu is seeing 1.3%. You're also seeing some of these smaller dairy producers in China also seeing some upside today on the back of that news. CNOOC, as we were pointing out, with oil prices coming down, we're seeing that filter through into the equity complex, and of course, as we were pointing out as well, JD.com and Kuaishou, the big drag yesterday. JD is going the opposite way of Kuaishou. Not quite, of course, recovering that 10+% drop that we had, of course, on Wednesday. Okay, CSI 300. Why is that relevant today? This cascade lower, we're again closing in on the 3,300 level. Now, so when we touched that level August 15th, what we noticed is you did get a spike in turnover, which is indicative of state funds coming in and supporting the market. So might that be, Yvonne, the line in the sand to watch? 3,300, as we approach that, do we get, again, a further pickup in defense of that specific line on the benchmark? Currently speaking, though, we're quite some distance from that still. We'll see.
Yep, and we're just getting that Bank of Korea statement from their policy decision just a few minutes ago, keeping the rates unchanged. And really what they're saying in the statement, though, you're getting a little bit more signs that they're removing that phrase in the statement of sufficient period of time, I'm guessing, of how to keep rates restrictive. So maybe that's a sign of maybe a little bit more dovishness. You're seeing that being reflected in dollar Korea here this morning. And they are going to determine the timing of that rate cut. So at least they're talking about it, at least now. But they're still talking about what probably led to this hold here today is what the concerns have been when it comes to household debt, the housing market, they say, the Bank of Korea, to monitor the impact of the government's housing market steps as well. Still maintaining, though, that core inflation outlook right now.
Yeah, also coming through here, the Bank of Korea is expecting consumption to likely improve gradually as they look ahead, of course, to possibly being able to lower rates at some point over the next couple of meetings or so. In fact, let's get straight now to Seoul, where, of course, our co-anchor Sherry is standing by outside the Bank of Korea, where the decision just took place, of course, with her next guest, Sherry.
And it's really a very unique dichotomy when it comes to that statement, isn't it? You guys said it. I mean, the key parts being the housing market, that they really want to continue monitoring the impact of the government's housing market steps, which gives you an indication why they didn't actually carry out the rate cut at this meeting. At the same time, as you just said it, South Korea's consumption is likely to improve gradually, according to the Bank of Korea. Consumption was a key concern for the Bank of Korea, which is why we've been expecting a potential rate cut to come this year. Joining us now is Seung-heon, economics professor at Soonchil University. He's also a former Bank of Korea senior deputy governor. Thank you so much for coming out here outside of the BOK today. We're seeing a little bit of rain right now. Hopefully will not be caught. But tell us a little bit about what you think of this hold today from the Bank of Korea, with the caveat, of course, that we are expecting something to happen later this year.
Okay. Thank you very much for having me here. We've seen the decision to keep interest rate unchanged at 3.5, and this decision is widely expected because of the housing market prices instability, and the housing debt is increasing recently. So there's a big worry about the housing market instability and the price increases. So as you see, the statement they are mentioning about that. And I also expect the governor's interview will be held shortly. There will be some kind of mention about that. So it can be a kind of hawkish tone to the market, but it's very important moment for the Bank of Korea rate cut decision afterwards.
Right now, in the statement, we're seeing that South Korea's CPI could fluctuate in the low 2% range for some time, according to the Bank of Korea statement right now. They did downgrade, though, the CPI forecast and the growth forecast ever so slightly for 2024. Is that an indication that that rate cut is coming sooner rather than later?
Yeah, the inflation rate with the headline or core, especially core, is having the downward trend very significantly. So we are expecting the inflation will be come down to the target range, 2% of target. And the BOK also expected the inflation rate going to the target about the range in next year. So if they were only considering the inflation rate trend, there might be some kind of discussion about the rate cut this time, but there's other issues.
I'm really curious to see what Governor Lee Chang-yong will say today at the press conference, as you say, because you know the discussions within that board very closely. Of course, you just left recently the BOK. What does that mean in terms of whether or not we could see a dissent this time? Because we didn't actually get a dissenter in the last meeting, right?
Yeah, even though I was there, but I cannot say the word because of my belief of them. But I expect today there's no dissenting votes. advocating the rate cut because the situation about the movements in the market, especially the housing market, is not accommodating the rate cut. But I expect some kind of the forward guidance of them to open the kind of rate cut forward in 3 months period. There will be some kind of increase of the members to open their possibility.
Because last month we actually saw from 1 going to 2 members
right.
when it comes to that potential rate cut to come 25 basis points in the next 3 months.
Right.
What will determine the timing, whether it's October or later in the year?
Mostly the one big thing is the, as you know, as I said, the housing market trend. If we can see the kind of the reigning, decreasing of the housing prices and household debt, it will be a good sign for the bank to move forward. And also, the Federal Reserve decision in September, it will be big impact on their decision. Market expect, I also expect there will be 25 basis point decrease. But if there is some kind of more sign of the labor market problems, they will be go further. So then many things will be changing. So we have to see.
That rate differential with the United States is very important for the Korean won as well, right? I mean, we have seen a little bit of strengthening right now for the Korean won, but overall for 2024, it's still been on a weakening trend. How much of a risk is that for the Bank of Korea that they could cut and it could hurt the Korean won more?
Yes. Previously, maybe a couple of years ago, the exchange rate is not depending on kind of the rate differences. But these days, especially this year, you can see many impact from the rate differences on the exchange rate. So they might consider these differences, and also, but right now we are seeing the appreciation of the Korean won, so it will be some kind of less burden on them.
At least when it comes to the weakening won, it's actually helped the export trends and then the broader Korean economy?
Right. But weakening won, the impact of the weakening won will be a very long time. It will take time. But the immediate impact will be only the financials on the corporations, companies. But in terms of the export, there will be no significant impact in short term.
Seung-heon, thank you so much for coming out. And as you can see, we're just holding our umbrellas because it's starting to rain.
Yeah.
But he's a former Bank of Korea senior deputy governor with a lot of insight, of course, into all of these deliberations at the BOK as we await, of course, that presser by Governor Lee Chang-yong. David.
How did you guys get those umbrella in without anyone noticing? Sherry-Ann, at least something is coming down in Korea. Not so much rates just yet. Outside there, the Bank of Korea. The briefing, of course, is taking place in about an hour from now. We'll see what they say about this decision. And, of course, slightly more, a wider window, if you will, or at least the window is being talked about as far as lower rates are concerned. We'll take you straight now from Seoul, we'll take you straight down to Chicago, of course, and live pictures. There we go. Former President Bill Clinton addressing the Democratic National Convention taking place. In fact, let's get a sense of what the energy of the room is like as we move from the old guard, as they say, to the rising stars of the Democratic Party. Our Balance of Power co-anchor Joe Matthew is with us, of course, who is at the DNC in Chicago. Joe, well, first, thanks for joining us. Talk to us. What is the energy like in the room?
That's a good thing.
Well, make no mistake, this is a major party for Democrats right now in Chicago, especially as we get to some of the heavier hitters. Like you said, former President Bill Clinton is speaking, and you could hear a pin drop right now in this very crowded room. They're listening very closely to the pitch that he is making for Kamala Harris and for Tim Walz. You're right, the rising stars who we're going to hear from a little bit later on tonight. But he's framing this, Bill Clinton framing this as we the people, the speech that we've been listening to, versus me, myself, and I. And he's taking some real attack lines against against Donald Trump here, which is the role he's playing, not unlike former President Barack Obama did last night. Tim Walz, later on, he's obviously the headliner here, the running mate on this ticket, and he's got a major opportunity to introduce himself to Americans. As we've been talking about him for weeks, a new AP North poll out today finds 4 in 10 Americans do not know enough about Tim Walz to even form an opinion about him. So they have an opportunity to frame him, to introduce him to Americans and identify him before the Trump campaign can. And the Trump campaign has been very busy describing him as dangerously liberal, another San Francisco liberal, referring, of course, to Kamala Harris's hometown. This is the second to last night. Tomorrow night it is Kamala Harris, who we're going to be seeing here accepting officially the nomination of the Democratic Party. And there are a lot of questions right now, as the Democrats have been very effective at pulling in entertainers, making this a cultural experience. Who might introduce Kamala Harris tomorrow? We likely have some surprises left in the next 24 hours here. Tonight we're going to hear from John Legend and Sheila E., some of the other entertainers who have been really taking the crowd up off its feet today. Stevie Wonder helped to lead into Bill Clinton. So they're just revving things up now. About an hour from now, there'll be a fever pitch in this room when we hear from the governor of Minnesota, Tim Walz. Here in Chicago, I'm Joe Matthew for Bloomberg. Back to you.
Yeah, we're going to look ahead to that, and certainly seems like a lot of entertainment and I guess you could say party going on there as well. Joe, thank you. Joe Matthew, Balance of Power co-anchor, joining us live out of Chicago. You can also turn to your Bloomberg for more on this. T-Live Go to get commentary analysis from our expert editors, all things U.S. election related. And at the DNC, this is Bloomberg.
Welcome back. You're watching the China Show, and we are in the thick of earnings season, and it's been a busy 2 weeks or so as far as tech goes. And of course, the one coming up today is Baidu. Shares are up, as you can see, 2% in the cash market session, 15 minutes into Thursday. I mean, a couple of things, right? So a few years ago, this was a search engine conversation. It still is, largely, but now with the aid of AI and what that means as an enhancer, of course, to the company's operation.
Not sure it's an enhancer just yet, right? According to Bloomberg Intelligence's Robert Lee, he's long talked about how these AI ventures for the company will remain a drag on profits. So they're expecting, at least analysts are, an adjusted net income by falling about 16%. In the quarter. That would be the steepest drop we've seen in more than 2 years for the company. You pair that with the struggles that we're seeing in the Chinese tech firms overall, when it comes to advertising and the like, the macro weakness in the economy, it might not be a pretty good set of results.
Yeah. And, this might be largely anecdotal, but it's been a consistent theme from a lot of the tech analysts we talked to, that if you had to order the large Chinese tech stocks, right? Tencent tends to always be one of the top picks. Baidu always is the opposite, right? I think Sean Yang was the latest one who said it's Tencent, it's Baba, and then you have, of course, Baidu as the underweight, as they say. Okay, Xiaomi, of course, is one, of course, very much in focus. Reported yesterday. Good set of numbers. The focus was on gross margins, and the company, of course, reported the fastest pace of revenue growth since 2021, thanks to this recovery in the smartphone market and, of course, the early success it's seeing in its EV business. The Vice President and CFO Alain Lam told us exclusively about the company's EV growth strategy.
Initially, when we started this business, obviously the market has grown to be much more competitive since we started this business back in 2021. This is the first year we start delivering our cars, and our initial expectations was not as high. We were expecting around 70 to 80,000 delivery for the entire 2024. But as you can see from our call last night, we've been talking about 100,000 to 120,000 units for this year, right? And obviously, EV is still very much a scale business. If you have a bigger scale, you can amortize your fixed costs more efficiently, number one. So once you have now that we have a bigger delivering target for this year.
What is that, sorry? The new delivery target?
100,000 to 120,000.
Okay.
So that allows us to amortize our fixed costs more efficiently, number one. Number two is, and we mentioned that in our call last night as well, is the suppliers have been really, really good to us. They were able to work with us and offer us the best prices that is available in the market, despite our scale was not as big as many of our peers So that also helped us in terms of lowering our BOM cost. I think number 3 is also that when you look at our EV, you can see that we offered a lot of different fun stuff, right? We have different colors, we have different accessories that you can buy, and that obviously help us enhance our margins overall.
When you talk about scaling the EV business, obviously it means a greater investment as well in factories or production facilities. Where are you looking to build those?
Well, I think we started our factory, our first factory in Beijing right now. That has an annual capacity of, call it, 200,000 units. We obviously trying to scale that up and become more efficient. So if you look at our plans, we started double shift beginning of June, and then we have to make some changes to our productions during the course of July that help us enhance the production capacity further. So if you look at our delivery right now, we are over 10,000 vehicles that we delivered per month in June and in July, most likely in August as well. So we've been able to scale our production facility as well as our delivery capabilities.
That was the Xiaomi Vice President and CFO Alain Lam speaking exclusively with our tech reporter Annabelle Jewelers. And more on China's earnings season now. Didi Global swung to profit in the June quarter as it prepares for a potential relisting in Hong Kong. Once hailed as a national champion that defeated Uber in China, Didi's business took a hit after Beijing clamped down on the internet industry. Regulators fined the company $1.2 billion back in 2022 and forced it to delist from New York's main board after it proceeded with an IPO, despite authorities' objections. AIA Group shares gain at the open in Hong Kong after a record jump in first-half new business value. The measure of future profitability of its new policies soared 21% to nearly $2.5 billion, which was in line with estimates. The group CFO Garth Jones told us exclusively that they saw double-digit growth across key markets, including Hong Kong and China.
Right. Now, Hong Kong.
We're extremely pleased with the results across not only the volume of new business, which you mentioned, but also our other key operating metrics were also up by double digits, our operating profit after tax and our underlying free surplus generation. As you said, we had a tremendous performance across the group with 36% growth in our China business, 26% growth in our Hong Kong business, 16% growth in our Thailand business, 27% growth in our Singapore business, and 14% growth in our Malaysia business. So very broad-based, and that's given us the confidence to issue the targets we issued today.
Yeah, well, speaking of growth, it's also something we heard from the HKX, which reported a 9% jump in profits. In fact, we spoke with the CEO.
I think, it's the normal ebb and flow of the market, right? So it's a good thing that we see volume really picking up in the months of April and May. And, the recent 2 months, maybe you see a little bit of softness. It's simply a reflection of, I think, a few things, right? The general market environment, macroeconomic conditions.
Chinese economy is not doing well.
I think, investors are worried about a lot of things these days, right?
And the flow of information out of China as well.
Election. But I always say we invest in the market for the long term, right? Yeah. So I still sort of pin my statement about being cautiously optimistic on the fact that we're sitting on very strong fundamentals, long-term promise, and we're talking about, and I've mentioned it to you before, the phenomena that the world is so underinvested in mainland China, and vice versa. Mainland Chinese investors are looking for opportunities to divest their investments overseas.
That's why southbound was up about 47%, wasn't it, from China into Hong Kong?
Southbound has been very, very strong this year. In fact, it's gone up in the first half compared to last year, second half, over 20%. So we are seeing that kind of interest from investors coming down from the mainland to diversify their investments. And I think we are sitting in a very good position in terms of capturing that as the super connector.
We have two pharma stocks in focus and one, hardware plus an EV stock, of course. Disappointing numbers coming out of CSBC and Wuxi, respectively. And of course, Xiaomi reporting quite a decent set of numbers, plus of course some growth coming through initially in the EV space. Margins in focus there as well. There's plenty more ahead here on the China Show.
Welcome back to the China Show. Here's a look at the HSI a half hour into the session here right now. And we are joining in on this equity rally here this morning, although it's just modest gains. We're punching about 0.5% the upside when it comes to the Hang Seng. 8 shares similar as well. We're trading around 29 points higher. But certainly there's a lot of earnings to tell you about. The tech sector really back in focus as well. Some pharma stocks that came out with earnings. So we're pretty much busy with that. Also, the macro picture a little bit more favorable than maybe a few 24 hours ago.
Yeah, I mean, the softer dollar is certainly one that we've been tracking this week. It's a big theme this week. And I think the difference between a soft dollar this week and 2 weeks ago was that risk is back on the table now, whereas 2 weeks ago it was the complete opposite. In fact, there we go. Our chart today is inspired by Bonnie Tyler, of course. Turnaround, total eclipse of dollar momentum, and the 14-day relative strength index is now at a 4-year low, indicative of how quickly and how far this dollar drop has taken. Of course, earlier in the week it was about a strength in EMFX, and the last 24 hours is really the move we've seen now in the likes of the euro and the pound, both at about the highest in about a year against the U.S. dollar. That's momentum in the FX markets. Momentum has built up in parts of this equity market in Asia Pacific. Case in point is down under in Sydney, where the benchmark there is now on track for a 10th day of gains, the longest since 2015, 4.5% over the course, give or take, of that streak. Broadly speaking, Asia is up because of this, because of Hong Kong. Yvonne is pointing out too. We're up 0.2%. We did get a resumption, of course, in S&P futures, where we are about 1% away from a new record on S&P. Keep in mind, Jay Powell is still on deck, and of course, next week we go into the jobs report plus results coming out of NVIDIA. Yep, that's the market story here for now.
Yeah, let's bring in Herald Vanderland, head of Asia Pacific Equity Strategy at HSBC. And Herald, we were just talking to a previous guest. Things are back to normal when it comes to the world of equities now, it seems, after what we saw just 2 weeks ago. How should I be looking at positioning around equities now?
No, yeah, there's a couple of things that's unfolding, right? So we have the Fed talking about is most likely going to cut. That's what the markets anticipate. The Japanese have raised interest rates. Now, as David just mentioned, that caused a lot of volatility in markets. What was it, about 2-3 weeks ago? But risk is back. The yen has strengthened. So that story in Japan is changing in the Asian region. The stronger yen means that probably the earnings for the exporters is not going to be so fantastic in Japan. So that money is going to go somewhere else. And of course, China is one of these larger markets that could absorb that. And we're in the midst of that earnings season. And yeah, we're going to see some confirmation that the earnings are holding up. Now, it's a bit early, right? We got some big numbers coming out late next week. But it's been a bit spotty, I would say. So if that holds up, then China could maybe continue to perform. It's got the macro helping out, so that could do okay in that sense. Let's hope for that these numbers are going to come through okay. That would actually, to a large extent, determine the positioning in the rest of the region as well.
Yeah, I think in one of your latest reports here, Herald, is one of your points, that mainland China's earnings season, I'll just read this verbatim for our viewers here, needs to provide comfort. Has it so far?
It has held up better last year. So when the 2023 numbers came through earlier this year, that was better than expected. Last year's numbers were, out of the top of my head, I think it was something like 13-14% in HSBC China. So that was better than expected. But the problem is that the numbers in Q1 and Q2 are not really fantastic, and they're not expect to be as well. So a lot of the numbers, good numbers, going to come in Q4 this year. So that's a little bit further into the future. We need to see guidance from companies to say that actually, things are improving and things go a little bit better, and we feel confident that actually momentum is going to keep up. So I think it's not just the earnings numbers, but actually that guidance that's important as well, because we are to a large extent dependent on a real good second half of this year. And so far, the numbers, as I said, spotty. So we're not really there yet. So that confidence is not really coming back in great waves.
Yeah, you're still remaining overweight on mainland China. I'm just wondering then, where are some parts of the market that you think are doing a little bit better? I mean, we talk about yield and income quite a bit now. Is that still the safer place?
Yeah, I mean, that's not a good sign, right? If people talk about yields safe and income and not at growth. We are overweight on China. That is a bold call that I dare to say. And the view that we had, and this was about 2 months ago, so is, hey, there's a lot of cash in deposits in China, and you can understand why. Households, they're uncertain about job prospects. They want to hoard cash, put it in a bank, and don't invest. The property market is not so good either, so that's not where they put their money either. What we've now seen is that some of that cash is starting to flow into bond funds. So they're willing to take on a little bit of risk, but not a lot. And that's exactly what you were talking about. That's that income sort of discussion, debate that you've had with other people on the show. Now, what we now need to see is that money then will flow into equities. That is not really happening yet. That confidence needs to come back. And that's going to come from property market performance, which, by the way, in July was okay, but in August, actually started to slip a little bit again. It's going to come from earnings as well. So that's why this earnings season is quite important. If that remains spotty, then that confidence is not going to come back immediately. And that simply poses a risk to that call that we have.
Okay, and the lower bond yields we're seeing, and I'm not talking U.S. Treasuries here, Herald, lower bond yields in China, is that in some way affecting flows within, of course, if the choice is offshore or onshore equities, what group does that benefit?
Well, the lower bond yields really only benefit the onshore market, not so much the offshore market. So that's where it's going to come from. And this is what I mentioned earlier on. If you're a Chinese household and you got some money and you got everything in deposit, let's say you got 100 RMB in deposits, right? The deposits don't give you anything. Your food inflation is probably higher. So on the margin, you're actually, in real terms, not making any money at all. So you want to put it somewhere else. But if you then go into bond funds and you look at the yield that you get there, that's not really high either. So those interest rates domestically onshore in China are coming lower. So that should eventually, one would hope, stimulate that money actually flows, for example, into equities. But we don't really see this happening at the moment. So those interest rates can continue to go lower, and then we'll have to see how that further impacts domestic equities. And I'm talking about the Asia and Shenzhen here to a large extent. So that process is ongoing, but that's not being determined yet. How much of the money is really flowing into equities? But it should benefit the onshore market a bit better.
Yeah, I want to broaden a bit and talk a bit more about how AI stocks are doing. I mean, there's been a lot of debate about whether we've seen the peak when it comes to this whole AI trade. How do you determine whether there is going to be a top now in Asia?
Yeah. So we've actually I would say it's almost 2 months ago now, 6 weeks ago, we started to write about, is there peak AI? At that time, things were still rallying, but if you looked at the magnitude of the rally in AI, we said, listen, that's as big as the internet rally that we had from 2007 to 2017 in China internet. So it's starting to stretch here. And I think we're seeing risks starting to increase. Regulatory risk, we've already seen that in Europe. They said, hey, we want to look at privacy issues and data sharing issues and these sort of things. I also think there's a regulatory risk coming for AI in terms of the power that some of the data centers are using. I wouldn't be surprised we've actually seen some power outages here and there. I read about power outages somewhere, only temporary in Virginia. And the amount of power that Malaysia needs to run data centers is about 40% of installed capacity. That's a lot. So I wouldn't be surprised that we're going to get regulatory risk on that particular front as well. And then, of course, the expectations are simply very high. And what we saw with the previous kind of result announcements of some of the leading AI players and chip makers is that when the guidance was okay and the earnings were okay, the stocks didn't really trade further onto that. So I'm really interested to see how the market response is going to be to the NVIDIA results next week and what, of course, those results are going to be. But I think we've seen the best of it. We've got to be a little bit careful with this particular rally here. And in addition to that, everybody's positioned in this, right? Everybody's significantly overweight on Taiwanese equities. So and we've seen that starting to underperform already. So we're really a little bit, I would say, worried about that particular segment in the market.
Yeah, everybody, their mother and their dentist brother-in-law, including their puppy, might also have an allocation towards AI. And you mentioned TSMC, so I'd just like to push you a little bit as well. Do we sit aside completely from the AI trade, or are there specific markets in the region that still offer relative good value as you look to expose yourself, of course, to this longer-term structural theme, Herald, as you know?
Yeah, no, exactly. So if you just take a very quick, broad trip across the region, right? So Taiwan is, of course, very much exposed, and some of the lead tech companies over there have rallied on the back of AI. So they have a great long-term story, but if AI fiddles a bit, they will fiddle a little bit as well. And as we said, everybody's there. I think you could say the same for the Korean stock market, but there are a couple of other drivers in the Korean market as well. There's this corporate governance change, they're paying more dividends, doing some more share buybacks and these sort of things. That helps out some of the other sectors as well. So that's maybe of interest. So we prefer Korea, therefore, over Taiwan. And then I think the other part of the region that is somewhat underexposed or people don't look at so much is ASEAN. I know it's much smaller. But if there's one part of the region that would benefit from the Fed cutting interest rates, is ASEAN, because they've been raising interest rates to follow the Fed. And they've been waiting for the Fed to cut. They want to cut as soon as they can. Some of the central banks have said maybe we'll even go beforehand. If we get the confirmation that the Fed is cutting interest rates, I think we're going to see this in ASEAN as well. That will be positive to some of the ASEAN markets as well. In particular, I would say Indonesia and the Philippines.
Herald, thank you so much. Herald van der Linde, our head of Asia-Pacific Equity Strategy at HSBC. Now, also ahead here on the show, we're set to hear from the Democratic Vice Presidential nominee, Tim Walz. Of course, he is set to speak at the party's national convention taking place as we speak in Chicago. In fact, on that note, let me bring in our co-anchor, our Balance of Power co-anchor, Joe Matthew, is with us, in fact, right there from the floor. Joe.
Yeah, this is the big wind-up and the warm-up for what they're calling Rising Stars Night. The headliner, of course, the rising star himself, Tim Walz, the governor of Minnesota, Kamala Harris's running mate. We already heard from some bold faces in the Democratic Party, including former President Bill Clinton and House Speaker Emerita Nancy Pelosi. This is the turning of the page, and we're going to have a lot more for you here live from Chicago. Details later this hour. Straight ahead, this is Bloomberg.
Okay, we'll take you straight back now to Seoul, where the Bank of Korea governor is speaking. They held rates, although looking at the statement, it looks like they are starting to massage the possibility into the market mindset of lower rates possibly ahead. And of course, one of the lines that they removed from the statement was this sufficient period of time, which might indicate, of course, that policy no longer needs to be at these restrictive levels for a very long time further.
Yeah, does that lean towards maybe something of an October pivot? That certainly is what the market is leaning towards here right now. You're seeing dollar Korea there continue to see some upside when it comes to that weakness of the Korean currency. But we're also checking Hong Kong Exchange shares as well. Well, the Hong Kong Exchange operator reporting a 9% jump in profit in its first full quarter under the new CEO, Bonnie Chan. Speaking to us after the results, Chan says mainland Chinese investors are turning to Hong Kong to diversify their portfolios beyond domestic holdings.
I think, it's the normal ebb and flow of the market, right? So it's a good thing that we see volume really picking up in the months of April and May. The recent 2 months, maybe you see a little bit of softness. It's simply a reflection of, I think, a few things, right? The general market environment, macroeconomic conditions.
Chinese economy is not doing well. Let's be honest.
Okay, investors are worried about a lot of things these days, right?
And the flow of information out of China as well.
Election. But I always say we invest in the market for the long term, right?
Yeah.
So I still sort of pin my statement about being cautiously optimistic on the fact that we're sitting on very strong fundamentals, long-term promise. And we're talking about, and I've mentioned it to you before, the phenomena that the world is so underinvested in mainland China, and vice versa. Mainland Chinese investors are looking for opportunities to divest their investments overseas.
That's why southbound was up about 47%, wasn't it, from China into Hong Kong stocks?
Southbound has been very, very strong this year. In fact, it's gone up in the first half compared to last year, second half, over 20%. So we are seeing that kind of interest from investors coming down from the mainland to diversify their investments. And I think we are sitting in a very good position in terms of capturing that as the super connector.
Now, we're also hearing that perhaps Alibaba will change their listing here to a dual primary listing in the third quarter, in this current third quarter, and presumably then it could potentially be part of the Connect. Would you see that a big name like that could be a catalyst for further southbound investment, and how so?
Yeah. Well, a conversion from a secondary listing to a dual primary listing obviously give you the benefit of being Stock Connect included, or eligible for Stock Connect included. And it is something that we do speak to a lot of our listed companies, the population which is still secondary listed, for them to consider. And any successful case of conversion, I think, will be a good example to lead others to consider for themselves. So it is, I think, something which is very unique to HKEX, the ability of Stock Connect, which no other markets can offer.
Yeah. What's the IPO appetite like right now?
Yeah, I know you're going to ask me that question.
I always ask about the pipeline. You talk about 100 applications or 107 applications, but the size of the listings have not been as large as they were in the relevant period in 2023. Mm-hmm. I think there were 18 new IPOs in the second quarter. And you have also the 18C, the non-revenue listings as well. Right. So there's been activity, but it's just smaller size.
Okay, so let me give you the relevant figures. So in the first half, we've done 30 IPOs, but in the following couple of months, we've actually done really well. So year to date, we have in fact completed 43 IPOs. And just looking at the number of IPOs, we are number 4 in terms of IPO league table. Now, of course, you're going to tell me, but the deal size is so small, right? So in terms of fundraise, you're further down. It is true. And I think it's a simple reflection that business owners at the current valuation level may have second thoughts in terms of how big an IPO they want to do. However, these days, when people ask me about the IPO, I usually point them to another very exciting fact, which is not very widely reported.
What's that?
Which is the follow-on offerings, which have been conducted on our market by listed company year to date. And that goes to show the depth of our market. So what am I talking about? Year to date, we've seen many companies listed on our exchange conducted follow-on offerings, and these are mega deals. I'm talking about $5 billion. I'm talking about $2.5 billion. And these are overnight deals, right? Quite a lot of them are a combination of convertible bonds.
Convertible bonds has been a big surge
plus follow-on new issues of shares.
Yeah.
And the more exciting thing, if you ask me, when I look into these deals and I spoke to the bankers involved, the participation, the book, is actually very broadly subscribed by not only investors in the region, but also investors from Europe and from the US. And that's telling me that if there is a quality name in the right sector and investors like them, they're going to participate. And that's exactly why in my dialogue with companies considering an IPO in Hong Kong and they're worried about the current valuation level, I tell them not to worry. The importance is to get the IPO done first. Our market is very deep, very efficient when it comes to follow-on offerings, and I think the recent slate of deals proved it.
And that was Bonnie Chan, the boss, of course, at HKX, speaking with Steve, our Chief North Asia correspondent. Right, just ahead, is it a bird? Is it a plane? No, it's a flying a flying taxi. Bloomberg takes a solo test flight in China. And this is a machine, of course, that goes without your proverbial Tom Cruise in the cockpit. Colin Murphy, our reporter, gives his verdict next. This is Bloomberg. Welcome back. You're watching the China Show. So this once fictional future of flying cars has really, in some fashion, already arrived. So, case in point, New York, companies like Joby and Archer are aiming to buzz people from downtown Manhattan to the city's airports in just a couple of minutes.
It's giving me Jetsons sort of vibes, right? Over in China as well, Yihang is vying to produce the world's first uncrewed commercial flying taxi this year. And Morgan Stanley puts a price tag on it, $1 trillion potential for these next generation flights. For more, let's bring in our China government reporter, Colin Murphy. Colin, you got to test run one of these flying taxis from Yihang. How was it overall? How did it feel?
Well, I would say overall, in one word, it was kind of scary, actually. Even though the company goes to great lengths to sort of reassure you of safety. And eventually, once you're a little bit into the flight, at least in my case, you do settle down. You do feel that it is stable and quite secure. But initially, if you see the images earlier, it sort of looks almost like a spider, and especially if you're looking at it from the ground, it's kind of a little bit eerie. And then, of course, I was kind of focused on my assignment and lots of different elements to think of, so wasn't really thinking about the implications of exactly what I was doing until I was up in the air. And at that point, yes, I think, my body had a sort of physical reaction that this was kind of unnatural. But as I said earlier, you settle down and then you sort of realize, okay, this is stable, and you remember some of the explanations that were given to you about why it is safe. But I will say at the end of the day, I think it does boil down to personal choice, a personality. Some people are more open to this type of transportation possibility, and have higher or different, shall we say, different risk profiles. But I think a major barrier at the outset for these flying taxi makers will be to address these core issues about how to reassure consumers or passengers that this is actually safe and that this is something that they want to, enjoy and willingly participate in.
Yeah, well, I'd personally rather throw a scorpion down my T-shirt than maybe get in the early phases. But I mean, Colin, compared to I think a few weeks ago, you were in a robo-taxi, of course, which is less susceptible to the forces of gravity. How does this compare to that experience a few weeks back on the road?
Right. I mean, it's pretty obvious what I'm going to say, but with the robo-taxi, you're actually on the ground, and it's just a completely different sort of sensation. On the robotaxi, there was, of course, this SOS button, which, luckily I didn't have to use because there was no unforeseen circumstances. But should I decide to use that, then the car would be controlled by people who are at a remote control center and who have experience driving. Now, the flying taxi folks say that they have a similar concept, that, there are people on the ground that are keeping an eye and that can intervene in the event of some sort of unforeseen circumstance. But obviously the scenarios and the sort of seriousness of a situation in the air versus something on the ground are completely different. And I think, going back again to that sort of physical impulse, I did feel much more secure when riding a robotaxi. It felt a bit more natural. The flying taxi, I had to kind of push against that a little bit.
Colin, fantastic reporting as always. Colin Murphy there in the latest tech in China government reporter. Breaking news out of the Bank of Korea here. 4 members of the Monetary Board are open to a rate cut in the next 3 months. We'll be live out of Seoul after this break. This is Bloomberg.
Getting more intel on what really happened behind closed doors behind that Bank of Korea rate decision to keep things on hold. And it seems like we're getting a breakdown of what at least these policymakers were thinking, right? So 4 members open to a rate cut in the next 3 months. 2 of the 6 preferred keeping rates at the same level of 3.5% in that given time. But, as Rhea mentioned, the governor, rate cut conditions created when we look at CPI alone. So, it sounds really like they're looking towards this pivot now. Let's get to our very own Sherry An, our Asia Trade co-anchor, joining us live outside the Bank of Korea. This sounds like a Bank of Korea that's ready to cut rates now, Sherry.
Yeah, the forward guidance, especially when it comes to the rate outlook in 3 months, having changed to 4 members now actually being open to a rate cut instead of the 2 that we saw in the previous meeting. Of course, it gives us a clear indication that that is perhaps where we're headed. Bloomberg Economics had thought that the rate cut would come in October. Still interesting that when it comes to the rate decision today to hold at that 3.5% for a 13th consecutive meeting was a unanimous decision. Now, the fact that we did not get any dissenters is interesting, but not necessarily in the sense that it might preclude a rate cut going from here. HSBC has looked at the rate cut decisions since 2010. In the 12 instances, more than 5, we heard that in the previous meeting there were no dissenters. So we'll be watching the environment very closely. As you said, Governor Yi focused on financial stability and also saying that it's not about curbing home price alone. But of course, we know that real estate prices, a very hot property market here in Seoul and in surrounding areas, has kept really the BOK from moving faster, despite the fact that we are seeing, of course, more sluggish consumption on the ground.
Yeah, Sherry, so, the calendar on the BOK has 2 more meetings this year. So August is the one now, okay, my brain's asleep. October 11 is the next one, and then you have one at the end of November. Both fall within this 3 months that most members now seem to be open to a reduction at both those meetings. Based on the conversations you've had there on the ground from yesterday to this morning, is there anything that might prevent the BOK from being able to deliver these rate cuts?
Of course, we keep hearing the phrase data dependent, right? So we'll be watching the inflation numbers. What we are hearing on the ground continues to be the property market. I stopped by the Bank of Korea yesterday as well, and talking to officials there, it really seems to be about the inflation trend. Of course, it's really about the household debt scenario as well, right? This is an economy that's highly leveraged. We're talking about debt to GDP ratios among the highest in the developed world. So we have seen that credit data coming from households trending downwards, but when it comes to mortgage-related data, we have seen that continuing to increase. Expectations when it comes to where prices go from here in the real estate sector also looking higher. So people on the ground also expecting prices to go up. Of course, expectations are something that is really looked closely by policymakers to get a feel of where actual data goes from here. So we have seen the minutes of the July meeting also talking about household debt, also talking about real estate pricing. So we will continue to watch where prices go from here. But really when it comes to perhaps the financial market situation, the Korean won strengthening a little bit in the past few sessions might have taken a little bit of the pressure off the Bank of Korea, but still overall in 2024, we're seeing a weaker Korean won against the US dollar.
Sherry, thank you. Sherry On there, our Bloomberg Asia trade co-anchor in Seoul for us, in fact, just outside the Bank of Korea building. From Seoul to Singapore now, where Mark Cranfield is standing by, our MLive strategist for us. Mark, it seems that the bar for central banks to lean hawkish is now a lot higher. I mean, we were talking about this earlier on. I mean, the Fed better cut rates, and some of these other central banks better follow the Fed as well. What do you think, now that this seems to be more a done deal, what do you think markets will be looking to discount next?
Well, it's still questions of employment and inflation. Those kind of numbers are still going to be very important. And then it's a question of whether the pricing in markets can keep pace with expectations that people have. So talking about Korea just there, I think it's probably true of most of the central banks in Asia. They're probably not going to rush, even if the Fed does move in September. They're probably going to wait a while, because don't forget, they didn't really hike as aggressively as the Federal Reserve did when the rates were going up. So they'd probably like to hold back. They want to be secure in the path of their currencies more than anything. So they would know that their currencies could get singled out for unfair treatment if they move too quickly ahead of the pack. So we've seen already this week, Thailand and Indonesia both held rates as expected. Korea's done the same again. They're giving a little bit of guidance that they're moving closer towards lowering, but they won't want to run too far ahead of anybody else. Particularly when you've got the big one in the region, of course, is China. They've been lowering interest or easing policy for a while. Their currency is relatively weak, but it's starting to turn the corner as well. So they'll want to see some stability across the currencies in Asia. Then they'll feel more confident to do something. It's quite possible that we won't see any major moves from Asian central banks this year. They may well defer until the first quarter of next year, when they're sure that the inflows into their equity markets are good, that their currencies are stable, and they're very confident of where the path of inflation is going.
Is that the same for China? I'm just wondering what we got. It was the second day where that PBOC fixing was actually higher than what traders were expecting. So we're seeing them dial back support in some ways. I mean, what is going to be the new line in the sand now for the currency?
Yeah, we were looking at this morning, and something around 7.1 looks like a reasonable level. Whether the PBOC agrees with us or not is another matter. But that, if you look at the history of the past couple of years, that seems to be a threshold which they would be probably where you would expect them to maybe support the dollar a little bit around that region. Certainly their behavior, as you were saying, their behavior with the daily fixing indicates that they're getting a little bit concerned about the yuan strength. It may be going a little bit too fast for them. But we've seen before that when the dollar is generally very weak, and it looks as though we're going into a period of very broad dollar weakness across the globe. Major currencies, Asian currencies, the whole range. Under those circumstances, it's pretty tough, even for dollar yuan, not to get involved in that whole stream of movement. And even then, with the PBOC setting fixings which are quite defensive, we can still see the spot rate trade below the fixing level. We've seen it go 500, 600 pips below the level before. So people will be getting used to that. I suspect the first line is somewhere around 7.1.
Mark, thank you. Mark Cranfield there, our MLI strategist, joining us out of Singapore. Just want to take you back to those live pictures out of Chicago, where the Democratic National Convention event is underway for another day. Oprah Winfrey, TV host, media mogul, is speaking here right now as we count down, of course, to the vice presidential nominee, Tim Walz, that's going to be taking the stage later on this morning and evening in the U.S. Plenty more ahead. This is Bloomberg.
From happening to anybody else, because if you
All right, taking you back to those live pictures at the DNC there. Oprah Winfrey now speaking, just, as we count down to when Tim Walz takes the stage here at the Democratic National Convention in Chicago. Our very own Joe Matthew is on the ground there and really are waiting for this speech here. It's interesting, Joe, that it's rare to see an incumbent party come forward to try to call for change, but this is what the Harris and Walz ticket is trying to do here right now. Is that the sort of energy that you feel on the ground right now?
The energy is wild inside the room. In fact, they've shut the floor down to more people because it's so busy. But you're right, they're trying to strike a very delicate balance here as an incumbent party, an incumbent administration calling for change and a new picture here, which of course has become possible by Kamala Harris moving to the top of the ticket and Joe Biden's decision to drop out of the race. A very unique set of circumstances that bring the gentleman from Minnesota to the podium tonight. Tim Walz, of course, her running mate, is going to be talking a little bit after we see Oprah Winfrey on the podium right now making the case for Kamala Harris. And it's really about turning the page tonight. We heard some bold faces from Democratic politics already this evening. Former President Bill Clinton spoke, Nancy Pelosi spoke, leading up now to some younger names like Pete Buttigieg, the transportation secretary, and then ultimately Tim Walz, and what they're referring to as the Rising Stars night here in the convention. All of this, of course, culminates tomorrow when Kamala Harris accepts the nomination from her party here in Chicago.
Joe, and what case does Walz need to make on this, arguably his biggest stage yet, in a couple of minutes?
Yeah. Well, you're right. This is the biggest audience he's going to get maybe in his political career this evening. And the good news, at least in the eyes of the Harris-Walz campaign, is that most Americans don't know anything about him. There's a new poll from the Associated Press out today that finds 4 out of 10 Americans simply don't know enough about Tim Walz to even form an opinion. That's a lot more, for instance, than would say so about J.D. Vance. So they feel like they have a clean slate here and an opportunity to push back on some of the criticisms from the Trump campaign that have called Tim Walz dangerously liberal like Kamala Harris. They are hoping that this is tonight the beginning of an introduction, not the end of one when it comes to Tim Walz. He'll make the case for himself. He'll talk about his time as a coach, a teacher, a member of Congress, a governor, and of course a member of the Army National Guard. That's one thing we're going to be listening for pretty closely tonight. Accusations of stolen valor that we've heard from the Trump campaign. And he will likely address those head on when he speaks to these delegates here tonight.
Our Balance of Power co-anchor Joe Matthew there, of course, right outside where the DNC is taking place in Chicago. Busy evening, and of course it gets very busy as well this time tomorrow. There's special coverage here on Bloomberg Television. In the meantime, here are some global stories we're tracking at this point. PwC's China unit is reportedly bracing for a 6-month business ban from Beijing. That's according to the Financial Times. Now, the company or the unit could start as early as September as part of a punishment over its audit of property giant Evergrande. Now, more than 30 publicly listed mainland firms have dropped PwC as their auditor this year after scrutiny of its role in an alleged accounting fraud at Evergrande. Right, Chinese Premier Li Qiang has told Russian President Vladimir Putin that good relations between their two countries benefit the region and also the rest of the world. Li met with Putin in Moscow, Beijing says he has expressed willingness to explore cooperation opportunities in emerging fields of things like science and industry. China has become Russia's main trading partner after the 2022 invasion of Ukraine. China is launching an anti-subsidy investigation into dairy imports from the European Union. It's the latest in a tit-for-tat trade dispute. The investigation will target several products, including fresh and processed cheese. EU dairy exports to China last year were valued at $1.9 billion. All
right, we're watching Xiaomi shares here right now, actually rising the most in about 4 months or so on the back of these earnings, and the fastest pace of revenue growth since 2021, and that's thanks to a recovery in the smartphone market and the initial success of its first EVs. The Vice President and CFO Alain Lam told us exclusively about Xiaomi's EV growth strategy.
Initially, when we started this business, obviously the market has grown to be much more competitive since we started this business back in 2021. This is the first year we start delivering our cars, and our initial expectations was not as high. We were expecting around 70 to 80,000 delivery for the entire 2024. But as you can see from our call last night, we've been talking about 100,000 to 120,000 units for this year, right? And obviously, EV is still very much a scale business. If you have a bigger scale, you can amortize your fixed costs more efficiently, number one. So once you have now that we have a bigger delivering target for this year.
What is that, sorry? The new delivery target?
100,000 to 120,000.
Okay.
So that allows us to amortize our fixed costs more efficiently, number one. Number two is, and we mentioned that in our call last night as well, is the suppliers have been really, really good to us. They were able to work with us and offer us the best prices that is available in the market, despite our scale was not as big as many of our peers. So that also helped us in terms of lowering our BOM cost. I think number three is also that when you look at our EV, you can see that we offered a lot of different fun stuff, right? We have different colors, we have different accessories that you can buy, and that obviously help us enhance our margins overall.
When you talk about scaling the EV business, obviously it means a greater investment as well in factories or production facilities. Where are you looking to build those?
Well, I think we started our factory, our first factory in Beijing right now. That has an annual capacity of, call it, 200,000 units. We obviously trying to scale that up and become more efficient. So if you look at our plans, we started double shift beginning of June, and then we have to make some changes to our productions during the course of July that help us enhance the production capacity further. So if you look at our delivery right now, we are over 10,000 vehicles that we delivered per month in June and in July, most likely in August as well. So we've been able to scale our production facility as well as our delivery capabilities.
Yeah, and that was our exclusive chat earlier on with, of course, Annabelle, our tech reporter, and the Xiaomi Vice President, CFO, on their earnings. And it's really one of the many conversations we've had recently, this last 24 hours, with executives around the earnings season. HKX, of course, some of your viewers might have caught that chat that Steve had with, on the back of earnings. I think shares are up 0.7 of 1%. They see this, the companies benefiting from this flow of money southbound to Hong Kong as mainland investors look for yield and look for opportunity outside, of course, the absence of such onshore. And apart from this, you would know more about the story. You know Bonnie more than me.
Well, apart from being the Hong Kong Exchange CEO, she used to be a former IPO lawyer. She's also a very avid racehorse owner, right? And she has one horse that's set to retire pretty soon. And, ironically, and it's not even ironic, the name of the horse is oversubscribed. But we didn't include this exchange that Steve had with Bonnie in the interview. But she has some other names, considering here for maybe her next horse. Take a listen.
I understand your racehorse, oversubscribed. It has retired now.
It has.
It's
8 years old.
It was an 8-year-old gelding, I believe. 5 wins over those years of racing. You believe it's an auspicious start to your first set of results. Any more racehorses in your horizon, and what would you name it?
Well, yes, Oversubscribed has done very well in his racing career. I have been busy, doing a lot of work for the exchange, so I actually missed the deadline in terms of putting in my application. That said, I have already thought up a name for my next horse.
What's that?
Outperform.
Oversubscribe and outperform.
Yeah, let's hope that for our market.
She's big on auspiciousness, maybe, but certainly that's how she thinks, and maybe that is going to be her vision for Hong Kong Exchange. We're looking forward to seeing Bonnie, your horse, in the near future. But yes, we're taking a look at when it comes from horsing around to maybe talking a little bit more about what's been going on in these bond markets, right? It's a hard pivot, but we got to go to Bank of Korea.
Yep, no horsing around from them.
No horsing around from the governor. They're talking a little bit more about the reaction that we're seeing across bond markets, not just in Korea specifically, right? And really talking about what we've seen, right? This bond rally and this drop in 3-year and 10-year rates. The governor is calling it excessive right now. So really pushing back against what the market really is pricing in of when and how much the OK is going to cut.
Yeah, just for context, right? The 3-year yield, one of the things he's talking about in the 10-year. So the 3-year yield went from 3.5% in May, and we're now below 3%. And I think the drop from the start of August took us from 3 down to almost 2.8%, and that was in line with this drop in the dollar against the South Korean currency. So maybe he's trying to push back a little bit on the market, getting, as markets tend to do anyway behaviorally, they tend to get ahead of news and try to anticipate these moves coming up as well. I think we do have those rates coming up on your screens very shortly. But yes, so there's room to cut interest rates, but hang on a minute. Don't get ahead of yourselves.
You could say that really for most bond markets these days, especially when it comes to treasuries, just given what's been priced in, right? I think for the Fed at least, we're talking about fully priced in for a 25 basis point cut in September. And it almost gives us a 30% chance of a 50 basis point cut even for next month as well. But we're talking about over 100 basis points being priced in for this year already, for the Fed specifically, So, we'll see what Jay Powell does to that. Is he going to push back against that?
Hopefully he doesn't. I'm not ready for another market meltdown. Once a month, please, max.
We can't take it too much. Blood pressure is too high. Putting more ahead. This is Bloomberg.
Okay, we're looking at the CGB market right now. So the couple of stories that we're tracking, and you see the drop in the yields here as well. So there's clarification coming through on the back of, and I think you might have heard it recently, that some of the banks are told to stop trading or to pull back from certain parts of the market. And the detail right now is so much so that they want to, it's not so much to push back against the bull market, but really to control the risk at these levels where yields are, the risk that is going on onto the balance sheets of some of these banks as well. And I think it's a very important clarification coming through here.
Yeah, it's to curb the possible systemic risks brought on by one-way drop in yields. That's what we've heard from Xu Zhong there, the Deputy Secretary of this NAFMII. And the PBOC has not yet set a range for the long tenor government bond yields. So he still acknowledges that there are some signs of a bubble though in this bond market. Long bond yields in particular, he says, has deviated from that reasonable range. But certainly they're watching very closely how this demand and supply dynamic is going to fare out when it comes to the bonds market here. But yeah, we're beyond bonds. We're tracking a lot of stocks here this morning too.
Yeah, and geopolitics, right? So for once, we're looking at some market reaction in equity markets to some of the geopolitical gyrations we're seeing between the EU and China. So yesterday, China opened up, of course, this investigation, this probe into EU dairy imports as some of these trade tensions, and keep in mind the EV story, of course, as a background here. And we're seeing that play out today in some of the the dairy producers in China that might actually stand to benefit, of course, in the event that these things happen. As you can see, of course, on your screens, some upside in some of these names listed in Hong Kong and mostly in China on your screens.
Yeah, we're also watching Taiwan stocks, property and bank stocks in particular here. There was this sort of real estate mortgage probe. So the central bank there basically requesting some banks to manage their total amount of real estate loans in order to improve excessive concentration of credit resources. So long story short, they're investigating into this. So you're seeing a bit of a mixed picture, but mostly lower here on some of these stocks this morning. So that's one to watch. Obviously, we're still watching the tech sector, some big moves when it comes to Xiaomi and the like here in Hong Kong. And we're just moments away, I believe, from hearing from the vice presidential nominee for the Democratic Party at the DNC, Tim Walz, soon will take the stage there to make his debut as the official nominee. That's it for us here on the China Show. Bloomberg Markets Asia is next. Stay with us.